people from the next panel. Erin, Grover, Jacob from Asset Management. Are they all here? Right. Okay, so the next panel will be starting now. It's on digital asset management from asset tokenization to the emergence of ETFs, which is one of my favorite subjects. Please come on board. Come in. Yeah, great. Yes. So microphones for the gentlemen and the ladies, please. Who's going to be the moderator? You're the moderator? Okay, so why don't you start introducing the people? Let's go for it. Thank you very much.
2, 1, 2. Mic on? Yes. Okay, great. Welcome, everybody. Welcome to the blockchain week here. I'm really excited for this panel. We're going to be discussing digital asset management from asset tokenization to the emergence of ETFs. I'll be your moderator today here. Sheraz Ahmed, Head of Business Development of the Crypto Valley Association, and also the Managing Partner of Storm Partners. So, without further ado, let's get right into it. Our experts here who will be providing some insights on the rise of digital assets. Maybe do a quick round of introductions first. Maybe ladies first. Erin, would you like to start?
Thank you. So thank you everyone for attending. My name is Erin Grover, and I work with Jacobi Asset Management out of the UK. I have about 4 years of experience with crypto funds. I've been working with crypto funds since the beginning. And I started out with a crypto algo fund out of Ireland back in the day. I realized I didn't want to run a crypto algo fund because it takes a lot more effort than most people realize. And Wilhelm Roth can tell you a little bit about that because he's the CEO of Icoinic. But anyway, so I moved on to do client placement with crypto funds. And essentially I went on a worldwide hunt to figure out which funds were the best over the course of 8 to 9 months with 2 advisors, both from the traditional space, one being from Barclays and one from Fidelity and Bank Paribas. So I finally found some of the best funds, and I've been working with Icoinic Capital with client placement for over the past year, and they're out of Amsterdam. And again, Wilhelm will tell you more about Icoinic. But yeah, I'm always looking out for people and making sure that they're getting into the right types of funds that are safe while getting to experience cryptocurrency and trading. So it's an exciting time to be here. Thank you.
It is. Thank you. Thank you so much. Wilhelm, would you like to go next?
Yeah, sure. Wilhelm Roth. I'm the CEO of Icoinic. We're based in the Beursplein 5 in Amsterdam. That's the heart of the financial sector in the Netherlands. My journey with crypto started a bit in an uncommon manner. I started investigating UPI projects in Bavaria with local government to see how it can work. And cryptocurrencies back then, that were around 2015 or so, were still up and coming. It was something that you only correlate with pizza at the time. And that got me to dive through that rabbit hole, continuing to work in another asset manager based in Amsterdam as well, and continuing and growing through it to my current position as the CEO of Icoinic, which is one of the largest asset managers in the Netherlands and one of the most active high-frequency traders in Europe. It's quite a privilege to see how our asset management ecosystem has evolved from kind of crypto basement asset managers to companies like Icoinic, who are we're having our offices straight on the trading floor in the stock exchange in Amsterdam. So fantastic to be here. Thank you for being here, and thank you for having me.
Wonderful, thank you. And yeah, it's come so far. I hope you didn't spend any of those bitcoins on pizza at the time.
I still hold some of the old ones,
Yes.
so definitely for sure.
Wonderful, thank you. And last but not least, Jesus, would you like to go next?
Right, happy to be here. My name is Jesus Rodriguez. I'm the
Jesus?
I'm the CEO of IntoTheBlock. We're a relatively well-known analytics platform in crypto. We have over 190 clients on the institutional clients on the analytics side. So you might have seen our analytics all over the place in exchanges and public websites and wallets. In addition to that, IntoTheBlock has a division that focuses on building quantitative strategies in DeFi, and we have over $500 million deployed in these strategies just in this year. My background is as a computer scientist. I teach applied AI at Columbia University. Have had 10 years as a distinguished engineer at Microsoft, running quant infrastructure at funds like DRW in Wall Street, a couple of exits as an entrepreneur, and been an active investor for a decade. Now working on IntoTheBlock at the intersection of machine learning and crypto.
Wonderful, thank you. And we can get right into things now and wake everybody up a little bit. And so let's start by talking a little bit about digital asset management. And back in the days, there wasn't so much, as Wilhelm, you were mentioning. And so what is, for our audience today here, the best way to maybe store and even manage crypto assets? Maybe Erin, you would like to go first?
The best way, in my experience so far, I mean, it depends on the person. Some people are active day traders and want to take care of it themselves. And then some people just want to buy crypto and just let it sit, and they don't even want to deal with the technology. So it all depends on the person. But I mean, honestly, holding crypto online is always a risk. And that's why I'm really, and many people are really excited about ETFs, so people can have exposure to crypto without holding it online and worried about getting hacked. So, I mean, the space is changing quickly, and we have more ETFs coming out in the world and ETNs. So,
great, yeah, and we're going to be able to talk a lot about the various ETFs and even the difference between an ETF and an ETN, which we were discussing a little bit earlier. But I know that Icoinic has a partnership, is working with Copper as a custody provider. I mean, why did you choose Copper? Why didn't you maybe self-custodying? Is there a reason why you chose Copper?
Definitely. I mean, it comes back to your previous question as well about the changes in asset management. And I think that when looking at the ecosystem as a whole, part of the beauty of crypto asset management is that it can just be you, the individual, building your portfolio, hodling or actively trading or deciding on your own strategies. While if you go to the more institutional or higher net worth individuals, the need for proper regulated or at least registered financial instruments in this field is critical. And in designing such instruments, like a fund, for example, having a custodial partner and a provider is quite essential. It's your one of your major risk aversion out of potential risk on your portfolio. So having a custodial provider, and by the way, congratulations to Copper for just onboarding Philip Hammond, just released today. So a partner like Copper is something that I think that at least for the more institutional grade, the larger funds and asset managers in the field is a prerequisite to be able to manage other people's money.
Yeah, can I add a dimension there? So with custody, there has been an interesting phenomenon happening in the market. So a few years ago, you will look at the market and you will see too many custodians, right? And only a handful of assets that were worth custodying from the institutional side. Today, what has happened is that there has been an explosion on non-Bitcoin Ethereum assets that are probably worth custodying from the institutional side, and the custodian platforms haven't kept up with that, technologically speaking. So today, if you're using Fireblocks, Copper, and all that, which we do, and they're great partners, one of the limitations that you run into it is that if you are outside the Bitcoin or Ethereum blockchains, maybe Binance Smart Chain in one exception, they don't support it, right? So if you're using Polygon, Avalanche, anything else, you need to look for other type of solutions, right? Alternative, whether it's hardware wallets like Ledger, whether it's other, custodian solutions, and that's Fireblocks and Copper that are probably more advanced. if you look to BitGo, you're out of luck, right? You're dealing with a couple of blockchains and nothing else. So if you're managing digital assets there, you need to get quite creative in terms of the custody. It's not like one custody solution fits all by any means.
Okay. No, great. Thank you. And now if we move on to more of the tokenization part, which, of course, a lot of digital assets, before being, let's say, normal assets turn digital, there is a lot of regulatory boundaries there, talking, for example, about the US and also about Europe. Erin, do you have any comments on kind of that landscape of security tokens and digital assets within the US or within Europe and how they play against each other?
I'm sorry, can you repeat the last part of the question? It was hard to hear.
Yeah, so as you're based actually in Amsterdam but have a US background, how do you see the differences between both jurisdictions with regards to digital assets?
I mean, the biggest difference for me is that most Americans can't access the investment products for tokens. They can't access them legally where everybody else can. So it's funny because I work with these assets, I work around them, I work with Wilhelm, but I'm not necessarily legally allowed to touch them, which is kind of funny. But yeah, it's unfortunate.
Oh, okay. And do you believe we're going to get to a point whereby the US is going to start accepting this more and more, or where do you think things are headed?
I think things are moving forward, but it depends on who has access to them. I'm not confident that America is going to make these things accessible to all demographics. I don't know. We'll see how it goes. But I'm hopeful that this is an opportunity for social inclusion. So we'll see.
Okay. Thank you. And Wilhelm, how do you see things, the tokenization space with Icoinic holding? I mean, is it something that has been growing more with regards to what you're doing, or?
From a regulatory perspective, you mean?
Yeah.
Yeah, I think very much so. I mean, Icoinic has been in open communication and open discussion with the European Central Bank as well as the Investment Bank, the European Commission as well in their open consultation. I think that for firms like Icoinic and other larger asset managers in our ecosystem, it's critical to engage with the regulators now. And the main reason for it is not to let new regulations come to place without having the crypto-focused mentality, environment, and focus come to paper. Because what we will have to deal with in the coming years is that for us saying that we don't want to engage with the regulator would mean that we would have to spend God knows how many sums to fix a small line in an article in a little obscure regulatory requirements. And luckily enough, I think that the regulators, at least in Europe, are quite open, engaging, as well as in Switzerland, quite adoptive and engaging. And probably we'll see quite a good amount of new regulatory guidelines hitting the financial sector in crypto within the next 2-3 years. One good example is MiCA, which is markets in crypto assets, that will come through development in the next 2 years. And I think that at least for medium, large asset managers, that will be quite the trick to try to see how they modify, especially their products, within a regulated ecosystem.
Thank you. Please, Jesus.
Yeah, so let me, I don't have a direct exposure as IntoTheBlock to a security token space, but I do have one as an investor. So this is a space that in 2018, everybody thought it was going to be the biggest thing in the market. And then nothing happened for a couple of years. And now we're seeing a little bit more momentum. So Securitize in particularly just announced that they're going to do they're going to launch or they just launched their ATS. That was an acquisition that they did about, it took almost a year to get it off the ground. And you're seeing more and more activity in the space now. There are some intersections that to me are quite interesting. Like when I think some of the biggest problems in digital securities are liquidity, like there is none, right? So I believe something like DeFi could inject a ton of, it's a native liquidity mechanism for security tokens. Now, if you think about the DeFi ecosystem today, it's 100% crypto to crypto. And it's already approaching a $100 billion market. So what will happen if you bring real assets into DeFi? Is it like a killer combination? There are some regulatory things there that are unclear. But if we're able to get past those, the potential is tremendous. And then the second thing that has been happening with digital securities is that technologically speaking, there hasn't been a ton of innovation in the space. So there hasn't been any product. So it's only the same, we tokenize real estate and we have an ATS. So it's the same boring products. And you see, that's what I like companies like Securitize that are pushing the envelope a little bit on this, because there's really not a whole lot of innovation in that area. And without that, there is not going to be any market.
And you mentioned those regulatory concerns for DeFi. I think popular question is always, how are the regulators going to regulate DeFi, or how you can even have real assets on DeFi? Do you have a solution to that, or some idea of how?
So here's a funny anecdote. So I'm based in the US, but I came to Dubai from Lisbon. So I spent a week in Portugal, and somehow the crypto community invited me to do a talk. They organized this meetup to talk about high-frequency trading and DeFi. So I do this 1 hour long talk about HFT, very hacky techniques about DeFi. What is the first question that comes from the audience? About regulation and DeFi. So I do have a lot of opinions about this. So I believe the space is going to get regulated. I'm not an expert in the regulatory landscape by any stretch, but the US has a long history of trying to adapt all regulations to new technologies, and it comes from the inheritance of the US Constitution that is a masterpiece that has survived almost everything in the evolution of the country. But when you look at something like DeFi, I mean, it's so different that I would love for regulators to be a little bit open-minded and try to come up with something that is just not to adapt the 1930 Securities Act to this space. Like, for instance, so what's the biggest complaint that regulators have is that you cannot do, the protocols are not doing KYC AML, right? So anybody, your money goes into compound and anybody, you don't know who is interacting on the other side. Now, here's an interesting counter-argument to that. Everything in DeFi is 100% visible. So could you provide, that we do this for our customers, we cannot do KYC AML because the protocols don't do it, but we can tell you with 100% certainty, we can give you an analysis of every wallet that is in a compound market, who are they trading with, how many liquidations have they have, what volume are they handling. So is that enough to get a quantitative analysis of that counterparty and do a risk analysis without having to do a full-blown KYC AML? So ideas like that, where all the data is visible, that in traditional market isn't, we think that could open the door to more interesting regulatory mechanism, but we'll see what they come up with. In my opinion, the first thing that is going to get regulated is what touches retail. We're seeing that with BlockFi and Celsius. Then I'm curious about what's going to happen with the protocol, and then the asset managers that are going through that are, so there are multiple levels to this.
Okay. No, thank you. Thank you so much. And Wilhelm, was there something you wanted to mention regarding that? I saw you.
No, I actually think that Jesus mentioned it quite well. I mean, at the end, I think the first step will be with more of the decentralized exchanges, those that are really integrated and interacting with the consumer as own. And we've seen that challenge when approaching our regulators in the Netherlands, that the preference is indeed not to engage with decentralized exchanges, but only with centralized ones. So this is quite an interesting road that the DeFi space is going through. But it's also beneficial for the DeFi space. I mean, it's part of its growth trajectory as a grown-up, mature asset within crypto.
Yeah, no, thank you. And we can talk a little bit about maturity now and some more, like, say, structured projects. And I know that, Erin, you wanted to talk a little bit about ETFs. And before we get into really that discussion, maybe you can give us a little bit of detail of what is an ETF, because maybe some of the audience aren't aware, and maybe the difference between an ETF and ETN, as it can be confusing.
Well, pretty much there's not a lot of people talking about these differences, and people think that ETNs are ETFs. So the difference really is, the ETFs are fully backed, where ETNs are not, and they're mostly backed if you look at what's behind them. So I think we have it's like 5 to 10 ETFs in the world right now for Bitcoin. And I mean, really, ETFs are the safest way to buy in to that kind of product. I mean, ETNs are great, and it's helping to open doors and conversations. But, you know, if an investor came to me and said, do I go into an ETN or an ETF, I would say definitely hands down ETF.
Okay, I understand. And can you unwind for us, and maybe for the audience as well, a little bit the hype about ETFs? I mean, why are they more secure? Are they more secure than just buying Bitcoin itself as an underlying asset? I mean, why is there so much hype around ETFs as a whole?
Well, because ETFs help investors to feel safe. They don't have to go to the internet and keep their assets or buy their assets there. They don't have to worry about holding it in a wallet or dealing with the technology. They can just go to their wealth advisor and have them purchase the ETF for them, and then it can be held in their traditional portfolio as, you know, in a basket. It's great.
Okay, wonderful. No, thank you. And I mean, it's a $6.7 trillion US in the industry. I mean, it's quite incredible. And I mean, after years of waiting for a US Bitcoin ETF, I mean, the community finally might get one. I mean, Jesus, care to comment on that? I mean, do you think it's going to happen?
I have no idea. I do, and if I had any idea, I probably couldn't speak about it publicly, but I really don't. I do think, I'm not sure disagreeing with Erin on this, but I do get the feeling it's massively overhyped. Like, so I think it's a necessary probe for the market, but I don't know if it's going to have a massive impact in the market. I could see it a couple of years ago, but with Bitcoin at 56K, you know, trillion plus, market cap, like really an ETF is going to change anything? Like, I'm not so sure.
I don't know. I mean, I think I'll take you to what you mentioned before about how the American regulators usually approach new regulations, right? And when looking at what ETFs could do, maybe not always the most exciting financial vehicle or a new product to put, but it's probably a product that will be part of the growth and evolution of added products and a way for the American regulator to potentially approach how they deal with further regulations on other products within our ecosystem that might be more exotic now for the regulator, but will be much more familiar with it in a few years' time.
So on that point, is there going to be a first native asset ETF like Bitcoin or Ethereum, or more like a futures, like a derivative ETF?
I think that this is primarily.
I'm sorry, I couldn't hear you at all from right here. There's a lot of noise.
Yeah, so are we going to have a native asset ETF like Bitcoin or Ethereum, or a futures ETF, like a derivative-based ETF?
So I was just talking about straight spot ETFs.
Okay.
Yeah. Did I miss a part of that question?
No, I think futures is probably going to come first. I believe so.
Yeah, and I mean, at the end, we need to remember that if you're a regulator, and well, I use a certain way of putting it. Think about the regulator and the rest of the ecosystem like approaching public transport. If you go and catch the tram or a bus, you probably go to your regulator, your FCA, your FINMA, or IFM. They're slow but steady. A lot of stops, a lot of checks, a lot of onboarding, offboarding. Then you go and you have the systems around it. The intercity trains, they tend to be the institutions, the large banks, larger asset managers that connect actively with the tram system to keep the entire movement going. And the crypto ecosystem, or at least the financial side of it, it's more like a Japanese bullet train. It goes extremely fast. It covers vast tracts of ground. And sometimes we forget that there are stops on the way that the regulator, the institutions need to take as part of their own evolution into our ecosystem. Because if we talked about crypto 5-10 years ago, there were still question marks about what should be done from the regulatory perspective. And this completely changed, that the regulator calls it crypto assets. It gave terms to how they approach our ecosystem. So now we're actually on track. And hopefully we'll see a continuous maturity, both from the regulatory side as well as our side, to keep on scaling up and amping our game up.
No, thank you. Thank you for that metaphor and the visualization of these different stops. Now if we look to the future, what are the stops ahead for digital assets after a potential ETF in America and all this? What are the next stops along this bullet train that is crypto? I mean, any one of our panelists, Erin, maybe?
I mean, from my perspective, and what I just saw in Africa, I was in Kenya for a month, observing what's happening with crypto there, which, Kenya is the second highest country for adoption in the world right now after Nairobi. But I mean, I see the biggest frontier in people using crypto for utility, going to the marketplace. I mean, that is what's happening outside the West. And I think that untapped and kind of, I wouldn't say ignored, but people aren't fully seeing it. That is so massive. It's incredible. It's hard to even imagine how big that is. So I'm excited about that.
Wonderful, thank you. Yeah, with the adoption, for example, of M-Pesa, I was in Kenya myself, and just seeing everybody transact through their phones, nobody having a bank account, was quite interesting.
Yeah, and to add to that, it's exciting, but my concern is that people, because I was just in Kenya watching how they use M-Pesa, to them it's all just digital money. And a lot of people, not everybody, but I am not sure that people will differentiate, or they'll know how to differentiate between M-Pesa, CBDs, and crypto. For them, it's just the money they get on their phones, and that makes me a bit concerned.
Yeah, I see. From the security perspective, it's no, I definitely see. Jesus, Wilhelm, your thoughts, future of digital assets. What are the next stops along this bullet train that we're on? Maybe Wilhelm, you would like to go first.
I think one of the maybe assets that we haven't talked that much about. We talked about ETFs, about DeFi, about high-frequency traders, which is our bread and butter at Icoinic, is maybe connecting it back to the regulator, and that's CBDCs, as central bank digital currencies, which I think will start to become quite an interesting challenge, especially for the crypto ecosystem, as kind of a counter reaction back from the regulator. Not even one. We're looking at a vast array of central banks, from the Chinese central bank to the American, as well as in Europe. Those central bank digital currencies could start to become part of regulatory requirements in tokenomics. There's quite a lot of debates, at least in Europe, around how CBDCs can be harmonized to gain more control over our ecosystem. And this is both could be a very blessed sign from compliance perspective, but yes, I'm not a compliance officer, or a bit more of a risk of strangling innovation, which is a bit more of what I'm worried about. Okay. And maybe the biggest sign from that is for the reasoning where the Chinese decided to suddenly stop crypto in China, only to prompt their own CBDC. So I think that this is something that we need to track very closely in the upcoming year or two, yes, the evolution of the government's currencies.
Yeah, it's a double-edged sword. Let's see which way it swings. Jesus, please.
Yeah, so from the digital asset management standpoint, there are all sorts of interesting things happening, from a structured product, central bank, digital assets. I couldn't be more excited about DeFi, though. Like, I think DeFi is fundamentally transformational to financial markets. It's probably the most disruptive thing, or has a potential to be the most disruptive thing that has happened in financial markets since the markets became electronic in the early 2000s. Think about living in an ecosystem in which you remove a large percentage of these intermediaries that you have in the form of market makers or lenders or things like that. Like, it just levels the playing field, and then it's digital, it's programmable, it's composable, it's transparent. So it has the potential of creating a generation of asset management services and products that we haven't seen before. Just like when the markets became electronic, that created the entire Chicago school, that created jump trading, DRW, Hudson River trading. I think DeFi is going to create a generation of asset managers that we haven't seen today.
Great, thank you. Yes, great words to close off. I mean, leveling the playing field. Thank you so much. Maybe we can leave some time for the audience. I don't know if anyone has any questions today for our experts around digital asset management, tokenization, or the likes at all.
Any questions from the audience? No? Well, I have a question for all of you. I'm an ex-banker, so they're moving to blockchain many years ago. What's next? Blockchain technology is invading completely my own old financial school. Right now I work on cryptos and all that, tokenization, but what's next? Where are we moving from here? Is it blockchain technology that is going to invade completely the old finance? Therefore, all my buddies who are ex or actual CEOs of banks are going to get fired and replaced by people that are like you, or else? Where do you see this going? What's your view to the future?
Can I just ask about what would you call invasion to an extent?
Replacement. You spoke about DeFi a minute ago, right? DeFi is invading, polluting, innovating, anywhere you want to use the actual current financial system, right? So where are we going from here?
I think, as Jesus also put it quite well, this is an issue of evolution. I think that for institutions who are not agile or limber enough to be able to pull their weight into DeFi, into any other asset class within crypto, and find their way to support their own operations, yes, they will find themselves consolidated into a different group. I mean, this is something that should be and has been a warning sign, especially when I'm talking to my colleagues from larger private banks, where the discussion is, okay, we have CBDCs from the state that already connect central bank to the citizen, while on the other side you have Coinbase, Kraken, and other payment and loan providers that are catching them from the private sector. And then you also have the layer of DeFi and other assets. So I think that at least for the banking sector, there will be almost a decade or so of further consolidations for those who resisted the invasion by not adopting part of the invasion's mentality.
Well, me as an ex-bank CEO, I tell my buddies, who are still, some of them are CEOs of banks in Switzerland, that they're going to get fired. And I've also told them that, in my opinion, everybody who's below 40 is going to move to Revolut, Seba, Sigma, Freak, or whatever, and they're going to lose those clients.
I wouldn't underestimate the ability of the financial sector to innovate. It might take, particularly Wall Street, Chicago, that those firms have proven that they can innovate, and they have assimilated many technology trends. So as disruptive as some of these technologies like DeFi could be, I think eventually you're going to see quant funds. You're raising jump trading all over DeFi, you're seeing DRW, you're going to see Goldman and these guys get a handle of it and adapt it to their own way. I don't think it's going to be that clean.
In my experience, I've had the best time working with former traditional bankers. So I think there should be like a Hug a Banker Day because they've made my career better. And I realized this years ago that I need to work with traditional people as much as possible so I can be successful and to protect what I do, especially when regulation comes. Because I'm just from the crypto side, but I haven't fully had the resources to just do this stuff on my own and have all the lawyers that I need and have all the experience. So a lot of my success in my career is because I went to the people from the traditional banking side, and a lot of them are bored and they want something new to do and they want to be innovative. So yeah, I've seen it like that.
But they also prove they can mess it up completely like in 2008.
Sure.
Right, so we also have that side of the story. I think that older bankers, including myself, I'm in the new finance, but older bankers are not wired for this new finance. That's the way I see it. Like children, they can use a phone or a computer in a way that we cannot use it. because it just is intuitive. But I think there's a huge debate. Any more questions? Sorry, go ahead.
But maybe just to put a bit more color on top of it, because if we're talking about banks and we talk about Jump Street or the Chicago boys, it's different kind of sectors that come together within the financial system. So you have your traders, and they, as any trader, usually they're the pioneers of this ecosystem. They start early, they develop, they adjust, they adopt, and they keep on moving. I mean, that's just the taste and study of it. As someone who comes from a country that comes with a lot of quite a background in trading, that's from the Netherlands, where the first stock exchange was set. This is just the trader's mentality. Bankers move differently, just like family funds move differently. Fund of funds move differently. So I think it's really dependent on what you're doing in the ecosystem. Do you have a crypto counterpart, like Seba Bank for the banking sector, like Merki Baumann also for the banking sector? For us, Icoinic in high-frequency trading towards the Chicago boys. So it really depends if you have counterparties.
I have many friends in London, for instance, that get all their paychecks and they go straight into cryptos. They don't go no longer to my banks, my traditional banks. They just keep their money in crypto. So I think that the new banker in 10 years from now will look very different than the banker of today. But anyway, that's to be proven. Any more questions, please? No? Okay, I'd like to thank this fantastic panel. Thank you very much for this great presentation.